Jeff Pierce joins us to continue the conversation on Meta. It kind of looks like we can talk about some tech strength here. Not yet for Meta, Jeff, but we're looking better. We're green after that little swoon. We're firming up. What's up with Meta's AI next step here? What are they doing?
Yeah, to your point, still seeing slightly negative on Meta this morning, but we have reports out of CNBC that Meta plans to launch its own standalone AI app in Q2 with hopes to really bolster their AI position by the end of 2025. The company is also said to begin testing a paid subscription service for their AI for a more powerful version of the software. Currently, Meta AI, of course, you can get it on Facebook, Instagram, WhatsApp, and they've got about 700 million monthly active users through those channels, which is almost a 50% rise from a few months ago. Now, of course, if we look at the history of it, we saw Meta, be released in September 2023. By April, it was on those apps. And the competitive nature here is that they're certainly wanting to compete with ChatGPT, one of the most downloaded AI applications out there. But of course, you've got Google, their Gemini, you've got BitDance, you've got Microsoft Copilot, all of those, in that competitive space for this AI investment. Now we know on the investment side of it, Meta has decided to spend about 60 to 65 billion in CapEx this year to support these AI efforts, as well as the rest of their business. That's a huge increase from last year. About 39 billion was spent last year. Investors have shown some concern over that spending in AI across many of these names. However, it does seem to be paying off. We saw Meta had about a 14% rise in their average price per ad in Q4 compared to just a 2% rise in Q4 of 2023. So we're seeing some pickup that seems to be related to these AI pushes out of the company.
Okay. So far, it's been in-app, their stuff, and so now it's going to be a different standalone product, and that's cool. I wonder how much it's going to look like just sort of the other LLM models and how much it's going to sync with their other platforms. I'm assuming it will. They've done a really good job about making everything basically seamless if you want it that way. Sometimes you maybe don't. You post something on one app and then it gets to the other ones, but pulling out the AI separately as a product probably seems like a pretty good way to monetize it too.
Yeah, absolutely. I mean, listen, they have 3.3 billion users across their social networking apps per day. So they certainly have an audience there to be able to push this AI out to. Now, I think if we're separating to a standalone app, that could provide an additional audience, including businesses that could utilize this. But it also could have more functionality to it, be more specific to what they're trying to do right now. It's certainly, the apps are impressive. The AI that we see within Instagram and so on is extremely impressive, but it's largely utilized for things like creating images and other details. Also, it probably gives them the ability to not overload those applications with AI capabilities right off the bat. They could continue to test some of the AI within a standalone app and potentially have more features available there. So I think it makes sense. And it's certainly, from a competitive standpoint, it's what their competition is doing. So it's a model that is working. So it makes sense that they would move this direction.
Okay. Yeah, it seems like it's been a big success, even compared to other AIs and other competing products. I mean, the stock speaks for itself, still in the uptrend too, holding $650. Any word on whether or not what it's going to cost or how they might try and make some money off of it? Because it seems like right now it's just been an added product within all their other stuff. You haven't had to download anything or pay for anything.
Yeah, well, of course, the majority, almost all of Meta's revenue comes from ad spending. So that's certainly going to be the focus point. In terms of spending, we do know the company is in talks to reportedly build an AI data center campus that costs about $200 billion. That's certainly a part of this. It's just another sign of how eager they are to take market share in this AI space. And that is really, by the way, the spending part, I think, is going to be the reaction from investors that I'm going to be interested in seeing, because we know investors have been very concerned about balancing the future revenue growth of AI versus the massive spending we're seeing on infrastructure. We've seen some reports that investments overall from a lot of the big companies like Amazon, Microsoft, Alphabet, Meta is expected to reach about $320 billion this year. Again, we're seeing some payoff in terms of for Meta in terms of that ad revenue. But the spending has been very high, and that's been more magnified as we saw, DeepSeek release, because reportedly they were able to spend just about $5.5 million to train their V3 models compared to the hundreds of millions we've seen from companies like OpenAI. So I think that's going to be a focus point. But we know Meta in the past, first of all, they've done a lot in terms of efficiency and cost cutting. Second of all, they've shown before Zuckerberg's not afraid to spend money on projects that he thinks are going to pay off in the long run.
Yeah, very true. And sometimes to their detriment, sometimes to their benefit. In this case, definitely to the benefit. Thanks, Jeff. Good perspective. Let's trade it. Dan Deming's with us, managing partner at KKM Financial. Great to see you on a Friday, Dan. Let's talk some Meta. You've been using any of their AI stuff?
I have not to this point.
Pretty good.
But certainly interested in the evolution, and you're starting to see it filter into pretty much everyday use. I'm certainly a co-pilot now on the Microsoft platform, and something that is knocking at your door every time you go through a spreadsheet now. So it is an interesting transition that we're moving through as far as the AI being integrated into all these different apps that we use on a daily basis. So I have not, but overall, as you guys pointed out, you and Jeff, I think, when you look at Meta, I mean, the price action speaks for itself. I think that going back to what you and Alex are talking about, though, this market, there's just a lot of cross currents. There's a lot of uncertainty. There's certainly, some shifting dynamics. The rotation under this market is pretty substantial here the first couple of months, Oliver, where you see, some of the mean reversion really starting to take hold. And so when I look at Meta, I think that, longer term, it's still a great hold. But given the volatility that we're experiencing currently, and I think it's going to persist into the middle of March, that I'm not overly aggressive here as far as a trade example this morning. So what I'm looking at this morning is just selling an out-of-the-money put in March, so just 21 days till expiration, to collect some premium and then have the opportunity to get put in the stock at a better level.
Okay. I think that makes sense at this juncture because the volatility of the sell-off is unique by Meta standards, considering it just went up. So that, if you're kind of the mindset to where you should take advantage of things that are unique in general, surprise element, the kind of surprise is that Meta finally sold off a bit.
Exactly. after that's record-setting run, and just looking at just the price action here, vol is back, at least for the time being, as the markets still try to get a feel for what the economy is going to do here over the next few months, and how the Fed's going to react, and how the administration changes continue to work their way through the economic structure. So. I still think that there's potentially further downside here for the market. And if that's the case, then, I guess there's a couple of ways to look at operating in that realm. And defined risk would be one if you're looking to just get long, I think, like buying call spreads or something like that. But then again, the price action here just doesn't lend itself, I think, short term to that being a highly probable outcome, or possibly, high probability outcome. So I think here, you can sell that March 600 put here for about $6.60 versus $6.50 on the stock. I think it's slightly higher now, but nonetheless, you can collect 1% versus stock over the next 21 days and have the opportunity to get put in below 600. Now, that to me is a more compelling level if we do see further downside. And if we don't, then you still get to collect your 1% and move on. Yeah,
all right. Fair enough. And $6 to do it is, I think, kind of the point of the trade, right? Pretty juicy.
Exactly.
Volatility that's found its way into Meta, despite what had been a steady, slow, upward grind.
Exactly.
Only slightly lower on the day. And also, you've got a good bit of time here, too. So you are going to have to, you might have to stomach a couple queasy swings, if it drops big.
You might, but again, the idea is that you're okay getting along below 600, and I see, from some support there around that 600 level. So, it technically would be breaking the uptrend to some degree around that level, but not by much. And again, when you look at it just from the price action standpoint, to me, it looks like there is a range there around that 600 level where you have some consistency in price action that I think lends itself to some support levels.
Okay. Thanks, Dan. Like the trade, makes sense.
All right, Oliver. Have a
Selling
great
some
weekend.
downside Meta. You got it. Dan Deming, managing partner at KKM Financial.